Welcome, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions on financial topics so that you, the viewer, can use them as a reference point, and we expect you to make your own financial decisions. Welcome, Blockhead traders. Today is Monday, May 17th, 2021, and this is Blockhead Traders Weekly. This week we have two traders, myself, Sprocket888, and I'm joined by fellow Blockhead trader Viper XL007. Last week we did an episode on how to play premium selling by going through a couple of filtering techniques. In this week's episode, we're going to visit a day trading technique known as a bear trap. But before we jump into today's topic, I want to give a plug out for our Discord channel. Blockhead Traders runs a free and open Discord channel. You can find the link in the description below. The traders in there are present almost every day during market hours and occasionally after hours and later in the evenings. We'd love to answer any questions you might have, give any feedback from episodes that you've seen here, and just say hello. We'd love to talk to you. Additionally, you might want to check out a link in the description below to thetagang.com/sprocket888. I make every single trade that I make publicly available on there, ones that I currently have in flight, ones that I've closed. You can see my entire track record present there. But hop into this week's topic of a bear trap. We are going to bring in fellow Blockhead trader Viper XL007, who has experimented with this day trading technique called a bear trap. Mike, what do you got for us?
Yeah. So, like you said, it's a bear trap, and I want to the whole purpose of this really embodies the learning community. I mean, and what we're doing here in the Discord, in general, not professionals, not financial advice, all that good stuff. So what I mean to say by that is, if you know this technique, if you have used this technique, if I'm doing something completely wrong, totally possible. Let's talk it out. I mean, I'm just learning, just like everybody else here. And I would love to be wrong or be corrected on something if something's not quite right. But nonetheless, this is also just to give you an idea of, I've done some day trading. It's, Jeremy's got me more into the premium stuff, more stability, better capital utilization, and day trading is really stressful. But when you have time, you want to roll those dice. I mean, it's also pretty fun. And so this was one technique that caught my attention. I did it pretty successfully a couple times. So let's jump in. And so with I don't want to say a lot of day trading, but because by nowhere near an expert, but what it seems like is that there is an element of pattern recognition, recognizing that goes along with day trading. See a pattern. I mean, it's the same sort of thing with levels. You're looking at levels, you're looking for a pattern, a trend, and jump in and whatnot. So this is no different in that respect. We're looking for a pattern. And so the pattern that I'm particularly interested in, let's go. This is, market open and market closed. This is our window. And let's go ahead and say that we have a stock. It's doing whatever it does. And then on open, wham, there's a big dip. And so it's off to a rough start. I'm going to go ahead and jot down a potential VWAP line here that, maybe that's realistic. Maybe it's not. But anyways, what we want to see in the setup for a bear trap is we want to see an accelerated, a big emphasized move on open. And then it's gonna slingshot a little bit. But we want to see it settling down. I don't like how I drew that. Let's try that again. We want to see it settling down and settling down to VWAP, because that's a big part of what I believe the underlying mechanics of what makes this happen. So settle down to VWAP, and then somewhere in this particular window is where we want to enter. And when this tends to happen is the trap. If it's gonna snap, it usually snaps in power hour. Usually snaps just into the afternoon. But particularly it snaps when we have this settling down. And what goes along with this settling down around VWAP is, I'm not gonna cloud this picture anymore, but volume. The volume just plummets and goes to nil. And so that's when conditions are ripe for a trap to snap. On open, the big movement, the slingshot, the rubber banding, whatever you want to call it, that there's significant volume with that. And as we settle towards VWAP, you should see volume settling out as well. So these are some of the conditions that really make this pop. And then in the case of a bear trap, we're going to take a bet, and we'll look at some charts to iron this out a little bit more, but we're going to take a bet, and we're going to enter, let's say, we put on an order. That was a terrible color, but nonetheless, we put on an order there. And then what we're hoping for is just a quick jump. It's not too significant. It's not going to like recover back to opening or anything. It might, but it might not. But after this settling, there's a high volume spike and the price jumps. And so again, I'm not qualified to discuss the mechanics, but my how I picture it is the settling to VWAP and the low volume starts to bring, whether it's algos or whether it's big positions, anything near VWAP is going to attract attention because VWAP is a fair price for an underlying. So my take is that we're settled near VWAP. We still potentially have a loss on the day. And so then now that brings in attention and people start shorting and trying to go bear on the pattern. But then there's a buying surge when the volume ticks up. And then that buying surge triggers those shorts to get out. And it's sort of a squeeze of sorts. And then when those shorts cover, now we're squeezing and we start really going. And so some of these can run, some of them just get a little spike. And then, sometimes they even do go bear, but it's a spike first and then it goes bear. So, by all means, observe and test like any method, and know your exit strategy of all things with day trading. So let's take a look here, at some charts and a potential, a filtering method that I, try to use here.
Before you hop to the charts, maybe you dropped a couple of terms there that maybe you can elaborate a little bit. VWAP.
Yeah. So VWAP is volume weighted average price. I believe it's average. Yes. Volume weighted average price. And so the idea of VWAP is to give you a sense of how overbought or oversold or fair a price is. And it does that by taking the volume that's happening on a position, and it's adjusting the price for the volume that's happening. And so what you end up with is, if I jump back here to my beautiful drawing, the green line, VWAP is always going to be more stable than any movement. And it is, there's a bazillion indicators you can use, and by all means, whatever works for you, focus on that. To me, VWAP is one of the most powerful, because it's, like I said, it's what directs a lot of financial decisions. So let's say this spike down here, we're way outside of VWAP. So what the fair price is being calculated. So there was so much volume that happened that oversold on this, um, that the way VWAP is calculated, it says, no, 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 your fair price for this position is right here. And the only reason it's so far down is because there was a heavy volume surge. So if we account for that volume surge, you actually, the fair price is actually up here. And where this comes into play is when you have giant brokers and things like that, they will never, never, never buy a position when it's way over here, which would be called oversold. It's way below VWAP. It's way oversold. The fair price is way up. And so they won't enter. And that's why you see things ping pong back and forth, because now all the big players, all the big fish, all the whales, they're out. They're not going to touch this thing until things calm down. And it works exactly the opposite in the other direction. And so when things start getting near VWAP, that's when things get interesting, because that's when a big brokerage, you got to like see the market through their eyes. They're massive. They just want to load up on things. They're investors. They want to go long. And therefore, in that mentality, they're not scalping. They're not doing all these other tricks that, you and I can do, because we're playing with pennies compared to them. So all they want to do is say, I want this underlying and I want it to be a fair price. And so they will purchase around VWAP because that's the calculated fair price. So that's what VWAP, the fair price of an underlying, when you can expect moves to happen as the whales come into a position. So if we go then, so here's one way. So I'm trying to get a handle on how to filter for something that's set up for this play. And I mean, you could certainly just sniff around, but this is a very specific pattern that you're looking for. And so this is just my rough attempt to try to filter for that. So here's what I'm doing. Like I said, on open, we want a big drop. But then we also want that winnowing, that narrowing of the elasticity, of the bounce back and forth. So here's what I got. I am saying, first of all, I set my volume to be something over 1 million, between 1 million and greater than 50 million. Again, this is just purely a liquidity thing. I encourage anybody looking at anything, especially for day trading, bump that volume up so that way the underlying is more liquid. You're not going to sit around waiting for an order to get filled. You could even bump this up to 2, 3, 4, 5 million, because the more volume, the more those orders are getting filled. So I set that to 1 million. That's kind of my standard for most things that I'm doing. Change from open. You can really play around with this one. So, depending on the day, this was just a little filter I put out this afternoon. So I look for, in this case, anything that's worse than a 7-point drop from open. So 7% or more loss on open. I kind of like to see more than that, because like I said, I want it to be big and then narrow down. But in this case, I chose 7 because I think when I went larger, things just weren't coming up. And then let's see. So I try to do this around, let's say 2 o'clock, 1 or 2 o'clock is when I go in and actually run this filter. And so for, let's say 2 o'clock, I want the percent change in the last 4 hours. I want that to be between, something less than open. I don't want it to, actually dropped even more after open. Like I said, we want things to narrow towards VWAP. So I go the last 4 hours, give me something that's only moved between -5% and 0. Usually I actually might keep this to like -5 to -2 or something like that, because I still want a loss of some sort. And then I add within the last hour. Now let's continue to try to get that shrinking. So also only show me something that's -2% to 0. And those are the big things. So again, I'm just trying to, I'm just, and this is creative thinking in filtering, I guess. I'm trying to, what does the chart look like and how can I represent that in a filter? So here's what came up today. We had 1, 2, 3, 4, 5, 6, 7 options. I went through, I looked at each one of these, in this BSAC, no clue what this is. I guess you could probably add into a filter to make sure that, you know, you're looking at a particular sector that you want, or a particular type of position, of underlying that you want. You know, so you don't end up with a barrel of oil. um, so, BSAC, that one just happened to catch my attention when I looked at the chart. But here's what happened with BSAC. Okay, so let's shrink it down a little bit. Let me zoom in. We passed the tests. I don't particularly love the candle sizes here. The volume is a little low, but it matches the bill. We had this big drop on open, so I mean, just right on open. We opened way low. We continued to fall. The blue line you see here is VWAP. I have that anchored. Nope, not anchored VWAP, just a regular VWAP. Anchored VWAP should be another episode. Love that. So it comes back up. We come above VWAP, we come down. And now here's what's interesting. Like I showed in my drawing, I kind of want it to straddle and just be, you know, indecisive. You want similar lows, similar highs, and you want it to be below and above VWAP. And what's happening here is we are, you know, going back out big picture, we are narrowing here a little bit, not as obvious, and that's part of why I didn't actually do this one. It wasn't quite as clear as I wanted, but nonetheless, we're narrowing and we're winding down. But notice we're winding down constantly, save for a couple little tests here, above VWAP. And so that would indicate to somebody looking to potentially enter this trade, that would indicate a bullish pattern, because you're above VWAP, you've tested VWAP, and it's not going to break. And it's withholdings, it's getting support on VWAP. So what ends up happening is here we come along, and this is about the 2 o'clock hour. Now we're really narrow. I mean, we're just flapping in the wind now. Volume is down here. Volume has just gone flat. And then all of a sudden, the trap snaps, and we got this spike of volume right here. And in this case, if you're confused, this is not a bear trap. This would actually be a bull trap, because those that are bullish on the position felt pretty confident about going in here and buying. But then the sellers come in and start pushing the price down, and we get down around here, and the pressure becomes too much for those bulls, for anyone that, you know, was trying to buy. And then right here, we get this big volume pop. We squeezed, and the bull orders lost, sellers won, and now volume settles back out. So that's the gist of what it looks like. Like I said, not the greatest example, but I wanted to use it because this was live. This was today. This just happened. Now, as far as some slightly more clear examples, SPCE, I don't know if it's just confirmation bias or what, but this thing does this a lot. And by a lot, it's not like every day, but if we go back to May 4th on SPCE, get better grip on the slider here. All right, May 5th, May 4th. So here we go. So May 4th, we open up, we get this beautiful, beautiful drop, big oversold. It actually, so if you've watched any of our previous episodes on my price action, my price levels, I've actually charted this. So that's why we see the pink line and the purple line. Those are price levels that I've identified. So first of all, yay, that drop stuck that level. 1918 kissed it, get out of here, took off. But that's not what we're talking about now. So we opened up, we got that big loss, we sprung back up. Blue line is VWAP. We sprung back up over VWAP. Now we're oversold. We come back down. And also pay attention to the volume indicators down here. We're still in the realm of high volume. I mean, we got this big sell after the spring up, and now we start to level out. Volume is dying off. So yeah, this is the May 4th trap. Came up, we go horizontal, and again, if you look at, let me grab a line here. Really important, similar lows. Looking at this line here, we just go flat. We go straight sideways. Volume dies off. If you're taking this bet, you want to enter somewhere around here. Once you get confirmation of the trend that you're looking for, enter around here. Boom, we get a pop, 19 to 20, get $1 per share. And then, know your strategy. Like I said, know when you want to get out. So if this was me, I'd hang in there. It's so much easier said than done. Depends on how these candles present themselves, but I probably would have gotten nervous as the candles started dying down. I go one of two ways. I might wait for the candles to diminish, or I might wait to see some red and see some rejection. So I may have sold somewhere around here. Ironically, I guess it would have been about the same price. I may have sold around here when the candles get weak, or I may have waited and sold on the first rejection candle. That's personal preference and how you want to play it, but don't get greedy. So that was one example. The second one was back on April 20th. Here we are on open. Ignore this VWAP drop. So VWAP, the standard one, changes every single day. You can't look at it from day to day. So you see it's way up here day before, and then all of a sudden it's way down here. That's because VWAP is calculated for that trading day. There's, again, other things like anchored VWAP where you can normalize over a period of time, but that's not the VWAP I'm using here. So we open, big drop. We go 22, we come all the way down to 20. And look at that. We come near this level again, a different one, but still near the level. And this one, again, notice if we look at on the highs that it was making, we have this downtrend, lower highs, higher lows. We're converging in this direction. Let's keep going in so we can get a better sense of volume. As this is settling, there's still a lot of volume, Now we go flag in the wind here. Volume starts really dying off. So again, now we're just flopping around on VWAP. I would enter around here. So here we're looking at, again, 130, right around 130. I would enter in and then wait for it, pop, and look at that volume spike. Crap, snapped. And this one, I'm sure I would have exited on the red because we got some pretty strong candles going up. Red comes down. I'd have been out on this first red candle, and just a fun little scalp, if you will. So that's the gist of it. I don't know, Jeremy, if this strikes any thoughts to you as to any of your strategies, or if it just feels like pure games. I mean, it kind of is.
um, yeah, it's definitely interesting. It's a little bit speculative, I guess you could say, for my tastes. with my day job and things like that, I don't get a chance to kind of do some of this stuff live. It's fun for sure, but I guess a couple of questions that I have when it comes to this. Um, I get the concept of where you're screening for the play to drop low. The beginning of the day, you get it kind of oscillating around that VWAP, and then as soon as that oscillation starts to tighten up and your volume plays off, that's really where you're looking to kind of go long for a brief period of time. But what does your order type look like there? Are you setting a stop loss in case? Because presumably, the way I look at this is, it could just as easily go up as it could go down. I would imagine. Of course, I don't play it very often, but I would think you'd want to have some sort of stop loss or what's your exit plan? I guess.
Yeah, so that's a good point. And again, like we will continue to say over and over in a lot of trading strategies, have an exit strategy for every single thing you do. Be a robot. And so yeah, in this case, uh, like you said, this is very focus intensive, and also part of why I don't haven't had a lot of time to do it, other than the couple times that I found some moments to do it. Because it's so focus intensive, there is no pre-calculated order put into the system or anything like that. I guess if you're advanced enough, certainly you probably could. But I'm looking at this live and I'm watching it. And so lunchtime, 12 to 1, I'll start trying to sniff these things out. Um, and I mean, time is of the essence because, once that snaps, I mean, real quick, if we look at that April 20th SPCE example, it actually came back and, came back to VWAP and actually starts turning a little bearish, but then it kept flopping around. And then next day, bloop, we dropped back down. So this is not something, this is just, I don't know if I want to call it an anomaly of the system or what, but I'm watching this live. And so my exit strategy is always based on VWAP. So I'm in Thinkorswim, with the auto send, order, and, I have and I'm just doing this. I'm sure there's a smarter way to do this, whether it's with options or something to, I'm just doing this with straight shares. So I'm in the trader tab on Thinkorswim. I've got 25, 50, 100, whatever the underlying price is, and allows me to take the portion that I want to gamble with. And so I'm auto sending those orders if it's 25 or whatever. So when I buy, that's obviously not that critical. I'll send that order and I'll get that filled. And at that point, now I'm just focused, and this is time intensive, time and focus intensive. So, what I'm watching for is a decent clearing of the reversal, because it's true, it could go either way, and there's nothing that's a sure bet in any of this. It absolutely could not be not be the bear trap you want it to be. So I'm looking for a big clear of, or a confirmation trend, in the bear trend below VWAP. And honestly, this candle here might spook me a little bit, but I'm trying to hold out. I'll pre-calculate ahead of time. This is running at, $20. So whatever my order fill is, I'll pre-calculate what is the risk I'm willing to take. Am I willing to lose $200? What am I willing to lose to take this risk? I'll have that predefined in my head, and, robotic. You got to stick to it. And if it crosses that threshold, I click that button, auto send the order, I'm out. Maybe I set that level too close to VWAP and it actually does trap. That's the risk you take, but that's also the point of defined risk and making sure that you stick to the plan, make a plan and stick to it. I guess, I don't know if that answers your question, but I'm hovering on the button.
um, yeah, I guess it sounds like your exit plan is you pre-calculate the maximum loss you're willing to take on the trade, and I guess as soon as you hit that, that's your exit point that you're going for there. So in your screening mechanism here for this play, do you target any particular amount of float in the stock? I know that when I hear or read a lot about different day trading techniques, they're paying attention to the amount of float of an underlying, which is really just kind of free shares flowing around. Are you targeting a particular float value or lack thereof float for this?
Uh, Technically, I am not, but that is probably a good consideration because that definitely gives you a sense. I mean, I'm pretty sure anybody watching this, knows the story of GameStop by now. Um, and float was obviously a huge consideration in that massive, massive, massive squeeze. So yeah, currently I'm not, but that would actually probably be a pretty good add-in here to help filter down because sometimes this list is not this small and there's a lot to go through.
Yeah. Okay. Cool. Yeah, I mean, I kind of look at this technique here, and I see it's very similar to kind of how I screen for options a little bit. Just I screen on a more macro scale, I guess. You know, you're looking for this imbalance off of VWAP intraday, and you're looking to kind of scalp that pop from there. And you know, last week when I was kind of showing different option screening techniques and things like that, I'll often use like a 21-day moving average, 50-day moving average, 200-day moving average, and I'll look for the real high volatility plays where you get these extensions past your moving average and you're waiting for them to kind of pull back to that moving average, and at that moment that's when I'll sell a put, which is of course well below that. And my thesis there is that this underlying trend is going to continue, and it's going to come down to that moving average and going to kind of come back up again, which isn't exactly the same, but a similar technique where I'm kind of looking at the volume and the price movement and this reversion to a mean, basically.
Yeah. Yeah. And there's a lot. I mean, in my journey so far, that's one thing I've really enjoyed is how much of the market makes sense and how much of price action. And like, I mean, before I started, trading and whatnot, it was always like, I don't know, the price is up, it's down. I don't know what the heck it's doing. Like, what's going on? But there's when you add in these things, like you said, anything average based, moving averages, obviously VWAP, all that kind of stuff. Like you just start to see charts and price trends way differently, and most importantly, way more predictably. That's a dangerous word to use in the stock market, predictable, but it's a game of odds. And when you can start to see those patterns and use those basic tools, the odds then become more in your favor, uh, so long as you always have that exit strategy.
Yeah, the term I would probably use aside from predictability is probability. And really
Yeah,
what you're viewing there is, yeah, you don't really know what's going to happen. However, it is highly probable that a particular outcome is going to happen, given certain patterns and things like that. And so I would probably substitute the term probability there. But
yeah, yep, absolutely.
well, it's definitely a neat topic, and definitely something you can probably look up on Bear Trap and other various internet content to educate yourself. I'd say definitely try that out in a paper trading account first, unless you're pretty bold.
Mhm.
Um, I know that a lot of day trading techniques, I like to try to pilot and try in a paper trading account just to see how they play out. Um, I'm not really a paper trading fan. I feel like the lessons that you learn through paper trading are useful to understand mechanics, but you can really be lulled into thinking that things are super easy in paper trading because you're not really attached to what you're trading. It's just kind of funny money. And I guarantee you,
Yeah,
your emotions are going to get in your head as soon as you go to the real world and you put real money on the line. So,
yeah. I mean, and in this case, because I agree. Like, I mean, the paper trading is great to test out an idea, but don't think that you're gonna do well in the paper trade world and then be like, all right, I'm ready for this. So even if you do the paper trade route, that's great. But when you go into the real world, like I mean, SPCE, that was a $20 stock, one share. Just grab one share and test it out. But put put something on the line, so it's not just, well, this is great, I don't care. Oh, look, I hit big in the paper account, so I must be great at this. Always be comfortable. Just as important as the exit strategy, be comfortable. Just grab a share. It's $20, and then boom, it goes down. You lost $4, or keep it manageable and keep it within your realm of comfortability.
Yeah, I definitely echo that. Paper trading is great for a technique to understand how the mechanics work, that kind of stuff. But definitely don't ever view how you feel paper trading to be how you're going to feel real trading. It's completely different. And when you jump to real trading, definitely start smaller than you think you should. The very first option contracts I was selling were 50 cents wide. So I was risking 50 bucks. I look back on some of those very early trades and I'm like, what the heck was I doing? I'm putting like pennies in the little horse outside of Meyer. Um, but yeah, that's how you get comfortable and putting your real capital on the line. Those are lessons you're going to remember a lot more. The wins and the losses, they're much more memorable with real money. So that about wraps up this week's episode, talking on the bear trap. Still a little bit of earnings season left. I did a little earnings screen, so I'm going to just throw a couple of tickers out there for you guys to consider. I'm probably going to be looking at some of these this week to potentially put a quick earnings trade on. These are pretty stretched in volatility from a percentage wise. Most of these plays are probably going to need to be put on Tuesday, which is tomorrow. So it's likely that by the time you might watch this, you might have missed them. But basically, Lowe's, Target, and Take Two Entertainment are all plays I'd be looking at to put on tomorrow. Lowe's and Target, their earnings come out before the bell on Wednesday, which means you got to get the trades in on Tuesday during market open. Take Two is actually after the market tomorrow. And if you happen to watch this a little bit later, on 5:20 before the bell is BJ's Wholesale. So not quite as much volatility, crush potential in BJ, but definitely Lowe's, Target, and Take Two are up there for premium crushes that I'll be looking at. As always, check out our Discord. I do tend to put different stocks and trades that I'm considering looking in, might announce them in there in some of the trading rooms. So tune in, see if there's anything else that might pop up on my radar. Otherwise, thanks for learning with us this week. And remember, think outside the block.